Briefly, I want to cover just a brief overview of the IRS examination process, since it is one of the principal ways that balanced dues are created. So, with respect to audits, as I mentioned earlier, there are three types of audits. There are correspondence audits, there are office audits, and then there are what we call field audits. So, with the diminished IRS resources, the IRS is leaning more and more towards correspondence on fairly simple issues, and even issues that in the past that required some documentation, like if the IRS is challenging a taxpayer's auto expense, those audits are being handled more and more by correspondence. So the taxpayer will get a letter in the mail. The letter says, "Hi, we're the IRS. We would like to challenge some of the information that's on your return. Can you please substantiate your travel expenses, your meal expenses, your auto expenses, your unreimbursed business expenses?" And the taxpayer will have 30 days, 45 days to kind of provide that information. So that's a general overview of what a correspondence audit is. An office audit is handled by a local IRS employee. And they'll send the taxpayer a letter and says, "Hey, we're the IRS. We would like to challenge your meal expenses, your travel expenses, your car expenses. But rather than having you send it through mail, we actually want a face-to-face meeting with you to go over your documentation." Now, the difference between an office audit and a correspondence audit is office audits generally involve issues that are fairly technical. They're handled by a tax compliance officer versus a quote-unquote revenue agent or auditor. And the tax compliance officer is generally a less trained IRS employee, although not always. And the tax compliance officer will conduct a meeting. They're generally kind of low-level issues, and they, although they can result in fairly large liabilities, there's something that's fairly easily handled at a lower administrative level. The third type of audit is called a field audit, and field audits are the more serious type of audits. Field audits are when the IRS sends personnel, usually a revenue agent, to go out in the field and investigate the taxpayer. So, for example, in cases of underreporting or in cases where the IRS feels that the taxpayer has overstated their deductions, the IRS will send somebody out in the field to go do an examination of the taxpayer's business and gather more information about them to substantiate a challenge to the return. Now, as a practitioner, you never want to let the IRS into your client's business as a general rule, but there are other things that you can do to mitigate agent.